Jesse Livermore. You've probably heard the name. He's one of the most legendary, almost mythical figures in the history of Wall Street, a true pioneer of day trading. But his life story, well, it's both a masterclass in how to play the market and a deeply tragic cautionary tale. So today, we're going to unpack the timeless rules that made him an absolute genius, and then look at the fatal flaw that led to his ruin. $100 million. Just let that number sink in for a second. That's the profit Jesse Livermore made by shorting the market during the Great Crash of 1929. To give you some perspective, in today's money, that's over $1.5 billion. It was, without a doubt, one of the single greatest trades in history. And that brings us to the giant flashing paradox at the center of his life. How does someone with that level of genius, a guy who could practically see the future on the ticker tape, end up completely and utterly broken? That's the big question we're really going to dig into here. I mean, look at this career. It was just a series of unbelievable highs and soul-crushing lows. He started out as a teenager with a tiny profit of just over $3. By 1907, he's making his first million during a panic. Then, of course, the monumental $100 million score in 29. But in between all that, he went bankrupt multiple times. This brutal cycle of boom and bust, it ultimately ended in tragedy. So first, let's talk about the genius. What made Livermore so incredibly good at this? Well, it all came down to a set of pretty simple, timeless rules for playing the game. And you know what? These rules are arguably even more important in today's crazy, fast-paced digital markets than they were 100 years ago. Okay, so the first batch of his rules is really all about humility and just paying attention. Livermore didn't try to predict the market or force his will on it. He just tried to get in sync with it. He was a huge believer in following the overall trend, making decisions based on what the price was actually doing, and, this is the big one, having the incredible patience to just wait for the perfect setup. That right there is the ultimate defense against FOMO. And this quote right here? This was the absolute bedrock of his entire philosophy. He knew that your personal opinion, your hopes, your brilliant analysis, it's all completely worthless until the market itself agrees with you. For him, the price action, what was happening on the tape, was the only truth that mattered. It's the final judge that cuts through all our biases.
So, you're probably wondering, how did he know when it was time to act? Well, he developed this brilliant concept he called the pivotal point. Now, this wasn't some kind of mystical signal. It was a specific, real price level, like a key support or resistance line that told him a major shift was happening. If he traded at those points, he knew the powerful momentum of the market was already on his side.
And he turned this whole theory into a clear, actionable strategy, basically a step-by-step guide for getting into a trade without emotion. First, you identify that key level. Second, and this is the hardest part for any trader, you wait. You just wait patiently. Then, only after you see a decisive breakout, you jump in. And finally, you look for a big surge in volume to confirm that, yep, this move is the real deal. It's all about removing the guesswork. Okay, so if following the market was his first big principle, his second was even more critical: protecting his capital at all costs. Livermore knew that just staying in the game was everything, and that meant being absolutely ruthless about cutting your losses, having the stomach to let your winners run, and always thinking about risk before you even think about profit. This is maybe his most famous quote ever, and it gets right to the heart of a huge psychological trap. We're all so terrified of losing small profits that we cash out way too early. Sitting tight is about actively fighting that fear. The big, life-changing money isn't made from frantic buying and selling. It's made by having the discipline to hold onto a great position and ride it all the way. And here we have one of the cardinal sins of trading that he warned about: averaging down, throwing good money after bad on a losing trade. He basically called it financial suicide. His rule was brutally simple: if a trade goes against you, you were wrong. Full stop. Admit it, sell it, and move on. In today's market, the modern stop-loss order is how you enforce this ruthless discipline. It is non-negotiable protection for your capital. But knowing the rules and actually living by them are two totally different things, aren't they? Livermore absolutely mastered the intellectual game of the market, but in the end, he lost the war he was fighting with himself. And that brings us to the tragic flaw at the heart of his story. And the crazy part is, he knew it. He wrote about it all the time. He understood that the biggest challenge isn't reading charts, it's conquering those destructive emotions that bubble up the second your real money is on the line. And that battle is 10 times harder today when we have the market in our pocket 24/7. These were the four big enemies he identified. You've got hope, which makes you hold on to a loser way past its expiration date. You've got fear, which makes you panic and sell a winner way too soon. Greed, which makes you take dumb trades just because you're bored. And then maybe the most dangerous one of all, hubris. That feeling of being invincible after a huge win, right before the market teaches you a very painful lesson. This chart, even though it's just conceptual, really visualizes the whole paradox of his life. His skill at analyzing the market? Almost perfect, a 95 out of 100. But his ability to master his own emotions, especially when he wasn't trading, tragically low. It was this massive, glaring gap between his intellectual brilliance and his emotional self-control that defined his life, and ultimately, his death. Now here's a really profound insight from those who've studied his life. He had dealt with failure forever. He'd gone broke and clawed his way back time and time again. He knew how to handle failure. It was the crushing pressure and the deep isolation of massive success that he couldn't handle. It just fed his ego, his hubris, and made his personal demons that much stronger. And this is where that inner battle finally led him. In 1940, despite being a living legend, he saw himself as a complete failure. These words, taken from his final note, they just show a man who was completely consumed by his depression and despair. It's just a gut-wrenching end for someone who had reached the very top. So what do we do with all this? What's the legacy of this brilliant, tragic man? What should we, as modern traders and investors, actually take away from his life? Well, the biggest lessons are less about trading systems and more about how to just build a sustainable life in what can be a very high-pressure world. When you boil it all down, the most important lessons from Livermore's life have almost nothing to do with charts. They're about taking care of your mental health, they're about separating your self-worth from your net worth, and they're about understanding that real, long-term success is about balancing that sharp trading discipline with your own personal health and well-being. And this really says it all, doesn't it? Livermore's life is the ultimate proof that money just cannot be the only goal. What's the point? Financial wealth is absolutely meaningless if it costs you your health, your relationships, and your happiness. The real challenge is finding a sense of fulfillment that goes beyond the balance in your trading account. And so we end with this question, which is really the ultimate lesson from the life and death of Jesse Livermore. He was a man who lived to trade, and in the end, it just consumed him whole. His legacy is a challenge to all of us, to make sure we're using the market as a tool to build a better life, not letting it become life itself.